Hello and welcome to yet another edition of Who Moved the Market. I'm Surabhi Upadhyay. Now, in case you've had the time to go and check your stock screens today, you may have noticed a massive rally in stocks of PSUs which are owned by the Gujarat government. So why is this happening? It's happening because the Gujarat government has changed the policy that governs the payout of dividends or the buybacks that these companies can do, or even the bonuses they can issue. So what are these changes and why is the market so excited about them? Well, to help us understand all of this, I have Sonal with me joining us on the show today. Sonal, thank you for coming in, because these are the stocks and you track, I think, most or if not all of these companies. They are the ones that are really making it to the headlines today.
And how, right? Look at the moves, around 5 to 16% in trade today. First, the news. The news is that Gujarat government, they've gone ahead and they have told these companies that, listen, this is the way to reward shareholders from here on in terms of dividend, bonus payouts, in terms of stock split and buyback. Most importantly, dividends and buyback impact shareholders the most, because bonus and stock split is merely an entry, right, in terms of the shareholding. So buyback and dividends will impact shareholders the most positively. In terms of dividends, it has to be a minimum amount of 30% of profits or 5% of net worth, whichever is higher. That has to be given out to shareholders as dividend. The second thing is on buybacks. Buybacks should be done by the companies which have a net worth of at least 2,000 crore rupees and they have cash and bank balances of around 1,000 crore rupees. So if these two criteria are met, both of them, the company has to go ahead and announce a buyback.
So these are not thresholds saying you meet these thresholds and then you may do a buyback. These are thresholds which say if you're meeting these thresholds, you have to do a buyback.
You have to do a buyback. That's what they are basically telling the companies to go ahead and do that. In terms of bonus shares, if your reserve and surplus is equal to or more than 10 times of your paid up capital, and for share split, if your market price or book value is more than 50 times of its value. Again, these are certain things that they have put out, but not necessarily every company will be able to, meet those levels. So that is an important point. All these stocks are, of course, rallying a lot, but these 7 listed companies, the likes of GSPL, be it Gujarat Gas, GNFC, GMDC, Gujarat Alkalis, there is GNFC as well. Most of them are rallying in trade today because shareholders are excited that maybe we'll get more rewards now that we are invested in these companies.
I guess that explains it. So let's take it one step at a time, and let's start by focusing on dividends, right? Because a bonus issue or a share split, that doesn't really give cash back to the shareholders. It's a corporate action. But dividends, because a lot of people play stocks purely for the dividend yield. So from this universe of Gujarat state-owned companies, your GSFC, Gujarat State Petrochemicals, etc., which are the ones you've been looking at where perhaps there could be some sort of further headroom to increase the cash payout?
Well, yes. So first of all, I looked at the FY22 numbers. For all these 7 companies, we don't have the FY23 numbers yet. But even basis FY22, Surbhi, if we look at GNFC, that is one company that will be able to do either buyback, or will be able to pay dividends, or will be able to do that share split, or also will be able to give out bonus shares. So it meets all those criteria. Like, they are comfortable in the current position that they are. So if you look at the numbers that this particular company has done, they have a profit of 1,700 crore rupees in FY22 with a cash balance of around 1,200 crore rupees, and the net worth is also on the higher side, way more than 2,000 crore rupees. It's coming at 8,000 crore rupees. So 5% of net worth at 400 crore rupees, 30% of profits at 511 crore rupees. So of course, it has to give the higher of the two, which is 500 crore rupees, and it has the cash support also in order to ensure that they are able to pay it out to the shareholders as well. So GNFC is one stock which stands out because it is able to do all that the government has asked without, of course, stretching its balance sheet, so to say. GSPL, just making a point here, right now they don't have enough cash in the books, but with the tariff hikes that we spoke about, that came in for GAIL, that came in for all these pipeline operators, they're expecting higher cash in their books. So basis the FY22 numbers, yes, they will not be able to at least give out that cash which is required. They might have to, like, take debt, or that's what analysts were suggesting. But maybe basis FY24 numbers, they will be able to do a buyback or give out dividend also at comfortable levels.
This is GSPL, you're saying?
Gujarat State Petronet.
State Petronet. So they meet the criteria, but where will they get the money for the dividend? Perhaps that's what we have to see, depending on how the FY24 numbers.
And also for the buyback, right? It has to be more than 1,000 crore rupees.
Right.
Your cash balance.
Right.
Then you have to do a buyback.
Right.
So maybe they will give out dividends, but 1,000 crore of cash, right now they don't have it. They're expecting it from higher tariffs coming in from FY24. That's when they will be in a comfortable position to go ahead with it.
Okay, before we move to the others, just a word on GNFC. I'm looking at the data that you had shared. 5% of net worth of this company comes to what, just about 400 crore rupees, and 30% of profits is 500. Just to understand the math, right? They have to give the higher of
highest
the two.
of the two. Higher of the two.
So 500 crores is what perhaps could be the dividend payout.
Usually what you would believe is that 5% of net worth. Net worth is usually a bigger amount, right? Maybe that's the reason why they said higher of the two, where it would equate. But here the story is absolutely different.
Absolutely. But with the caveat, of course, that these are, last year's numbers. We will have to see the FY23 picture. And then perhaps the market will have its own guessing game. So, okay, that explains these two companies. Gujarat Narmada Valley and Gujarat State Petronet. I'm taking names, full names, because a lot of the acronyms sound so similar, right? Okay, let's move beyond. There are, other 4-5 listed entities owned by the Gujarat government. Anything else? I mean, maybe a threshold on the cash or the net worth, something that investors and shareholders should keep an eye out on.
So, interestingly, Gujarat Gas, which is fundamentally a strong stock, doesn't have enough cash in its books. So, that is something that the investors should be very aware of. For Gujarat Gas, the company doesn't have enough cash as of FY22. It's just 21 crore rupees. But if you look at something like a GSFC, this is an interesting stock because it has holdings in, say, GNFC, it has holdings in Gujarat Gas, it has holding in the other listed stocks. So, one of the reasons why it's rallying is also this. Maybe on the criteria side, it's not meeting all of them. They have decent cash as well in their books, around 300 crore rupees. So even if they have to pay 30% of their profits at 300 crore rupees, they will be able to do that. But yes, of course, 5% of net worth is on the higher side of 600 crore rupees for GSFC in particular, because they have higher net worth. Their net worth is actually the highest in all these 7 stocks at 12,000 crore rupees. So that's why that 5% of net worth number is way higher for them. But yes, the other thing that's working for the stock today specifically is they have holdings in a lot of other companies as well. So that maybe is one of the reasons. For GMDC as well, they have good cash in their books. They're expecting more to come by in FY23 as well. And maybe that's why the street is excited that maybe they are already paying 34% dividend so far. That's the dividend payout for GMDC.
High percent basket of Gujarat government-owned stocks.
So GMDC has the highest dividend payout. And with this coming in, of course, 34% is high enough. But the fact that they are expecting more cash receipts to come in and the business fundamentally is doing well, that is the reason for excitement as well. Plus, they will be able to do the buyback going by the other criteria that your net worth should be more than 2,000 crore rupees and your cash in your book should be more than 1,000 crore rupees.
Which they already have.
Which they already have. So cash is not a problem again for GMDC. So cash richness for these companies is something that investors would like. For GSPL as well, again, I mentioned it earlier as well, 560 crore rupees of cash right now. But with the additional cash that is expected to come in, at least these companies will not, so we have to take debt to pay or, at least abide by the policies that have been put out. They're
quite, I mean, it's very hard to comprehend that you take on debt to make a shareholder payout, whether it's a dividend or whether it's a buyback.
And interestingly, you'll have to pay interest on that debt. That will again be deducted from your EBITDA and flow to your profits. So I don't know how it will really work.
Bad profits, but we're happy because we're giving you a dividend. Okay, I don't know how that kind of adds up, but yeah.
That's the reason why everyone's doubting the moves that we are seeing as well today. Because they are on the higher side, but it's actually a knee-jerk reaction for most of them. Because the news came out last night. In the morning, the stocks started surging. But the thing is, we still need to look at FY23, FY24 numbers to understand, because a lot of them have capex lined up. Be it GMDC, be it Gujarat Gas, they are looking at geographical expansion. Be it GNFC, it's putting up more plants. So it is capex heavy industry, so to say, and it's going to happen in the next couple of years. So how do they fund that if they are going to be giving out higher dividends?
No, that's a very valid point. Deepak Shenoy was telling us on one of our shows earlier that apparently this is kind of a cue from the central government, because for central government PSUs, there's already a criteria in place, 30% of profits, to be distributed back to shareholders. Perhaps the Gujarat government kind of wants to follow the same model.
But honestly, the likes of ONGC, HPCL, they have huge cash in their books as well, right? ONGC, not HPCL, is a company with high debt, but the others do have substantial cash reserves. So it works for them that way.
So in a profitable year, they can, afford to sort of pass away some of that benefit. But for some of the other companies with, of course, big expansion plans, like you explained, I think that's a very, very logical and very strong point to keep in mind. Which is why, I mean, as we come to the end of this conversation, what the policy does and whether these are just one-day kite-flying moves or we really have these huge mega dividends and buybacks from these companies, I think we'll find out, as the year progresses. But going back to fundamentals, because there are those who buy stocks for dividends and buybacks, and there are those who buy stocks for obviously, fundamental value. Just give us sort of a synopsis, since you track most of these companies, in terms of good ratios, profitability, just good expectations from the business. Which ones stand out this year?
Till yesterday I didn't know I tracked so many Gujarat-based companies. It was only last night
now
I
you're
realized.
the resident Gujarat expert as well.
I had no idea. But of course, let me start with GNFC, because this is one stock which has been very cyclical for the reason that the products that it sells are very cyclical in terms of pricing, be it TDI, be it acetic acid. They've been trying to move their portfolio to specialty chemicals. But if you look at their profits, just look at the numbers. FY22, 110 crore rupees of profit. FY21 was 44 crores. FY20 was 32 crores and FY19 was 48 crores. So it's been quite volatile for the company, and it also depends on what global supply is like. They sell TDI, prices keep going up and down. They sell acetic acid again, where prices keep going up and down. So while they're trying to move their portfolio to more specialty chemicals, that is where their capex is going, by the way.
Okay.
So yes, it's a company which trades, a stock which trades at reasonable valuations, around 12 to 13 times 1 year forward earnings. But
cyclicality is an issue with the business.
And if you buy it at the bottom, it works for you. But then again,
if you buy at the peak of the product cycle, then
it's a problem. Exactly. For Gujarat Gas, of course, fundamentals matter a lot for this company. It has more of its volumes going to the industrial side. Globally, again, it depends on what the raw material prices are doing for it. Gas prices. Last 2 years were really bad for the company because global gas prices were at a record high, maybe $54, $55 per MMBTU.
Now we have a new formula.
No, but they don't use domestic gas as much. They use the imported. 30% of their raw material comes from imported gas. That is now $14 per MMBTU. That's working for them. So yes, right now. And also in terms of volume, since it contributes to industrial more, it has always been the best performing stock in the city gas distribution companies as well. It's not only now in last 2 years that there have been headwinds in terms of margins. So margin has been a problem for the company, not volumes as much. So Gujarat Gas doesn't have the cyclicality problem. It caters to the industrial segment, so it works for the company. For GSPL, again, the kicker is coming in terms of the tariff hikes. Again, tariffs matter a lot for these pipeline distributors. It's a function of price into volume. So volumes have been higher for them. That's not a problem because gas demand in the country is enough. So yes, GSPL has consistently been doing well, and their dividend payout ratio has also been decent. So that works for them as well. Around 10 to 11% GSPL has been giving up. Well, Nigel was explaining that to me.
It's Gujarat Mineral Development Corporation. Again, going back to the full form in case you're confused with all the G's out there.
So yeah, again, it is a cyclical stock as well because they sell lignite, which is used when coal prices go higher. It's used as an alternative there. So if coal prices are higher, you might end up using lignite because that will always be lower than coal prices. It's a good, cheaper alternative, so to say. So that's why the company's profitability has been decent in FY22 because we spoke about record high coal prices last year. But before that, again, it was a loss.
It's a commodity play. So you have to move with the way the cycles move, demand supply.
And there was a new years back, so he has been trying to transform the company yet again. So yes, these are the 4 ones which stand out versus the others. So I just thought of highlighting those.
Okay, well that I think is a very, very helpful, very thorough classroom on some of the companies, their fundamentals, and of course, if the regulatory environment continues to be favorable, then dividends and buybacks for those who are looking out for the extra
cash.
Maybe
take more debt.
Hope not. Thank you, Sonal, very much for all the details. Great chatting with you. Well, with that, we are out of time, so we have to take your leave on this edition of Who Moved the Market. See you again with another theme tomorrow.